Internal Revenue Service IRS tax news. Taxpayers shouldn't believe these myths about federal tax refunds. Tax tip 2021-56, April 26, 2021. Now that many taxpayers have filed their federal tax returns, they're eager for details about their refund. When it comes to refunds, there are several common myths that can mislead taxpayers. We have these misleading myths that we want to be aware of. We have this one: getting a refund this year means there's no need to adjust withholding for 2021. So in other words, you're filing the tax return possibly for 2020, you get a refund in 2020, and you might say, well, that means that 2021 is okay to go and I don't have to make any adjustments with that. Meaning, remember, when we're talking about basically when the IRS wants their money, they want their money, for example, in 2020, they want their money during 2020, not when you file the tax return in 2021. Usually that happens with W-2 withholdings, or if you're a Schedule C business or have some other income where you do not have withholdings, you have to pay the IRS basically quarterly. Now, 2020 for many people is going to be much different, possibly, than prior years. So 2021 could look way different than 2020. Hopefully for many people, it will look much better. And a lot of people kind of switched from a traditional, basically, employee income, W-2 type income in 2020 to like a Schedule C income, gig work, and that kind of stuff. And that kind of stuff, you don't have the same kind of withholdings. And it might be that if you're doing well with that, that your income's going to go up in 2021. So you don't have that same kind of consistency right now from year to year as we've seen like in the past. Like there was one time when the whole family had one working person typically, and you had a very standardized income. It was receiving a salary. That's not really the case at this point in time. People are bouncing around, multiple people working in one family, in one household, and possibly having different jobs, possibly having a traditional W-2 employee job, as well as gig work and other kind of stuff going on. Therefore, the consistency from year to year is not there. So you still want to make sure that even if you get a refund for 2020, that you're looking to see if your withholdings are appropriate for 2021 so that you can avoid any kind of problems with penalties and interest, especially if you are not simply a W-2 employee or with one household. If you have multiple people working and or you do other work like gig work, then you got to basically keep an eye on this more closely to try to avoid penalties and interest and any kind of cash flow problems due to taxes. To help avoid a surprise next year, taxpayers should make changes now to prepare for next year. One way to do this is to adjust their tax withholding with their employer. This is easy to do using the Tax Withholding Estimator. So note that if you have any kind of adjustment in your withholdings, you want to take a look at the Tax Withholding Estimator. For many people, maybe even most people at this point in this year, it's useful to do that. So many people may not have filed their tax return in 2020 because you might be on extension in 2020, or the deadline was pushed out a little bit, and or you filed the tax return and your next year is still going to be completely different. So you might want to look at the Tax Withholding Estimator in either case, which will help you to determine what your withholdings should be, and that'll help you to fill out the W-4 form. The W-4 form that, if you're working with an employer, is what you give them in order to determine how much should be withheld from your W-2. You want to do it at the beginning of the year because then you can have a consistent withholding throughout the whole year. If you do not do it at the beginning of the year and you have to do it at the middle of the year, then your withholding is going to be distorted. You're going to have to over withhold possibly for half a year, and then you need to adjust it at the beginning of the next year. So the closer to the beginning of the year you can get your withholdings done correctly, would be best, and you could do that with the W-4. Also note, if you're talking to an employer about the W-4 and withholdings, they're probably going to be cold and not give you much information because they work in human resources. So they're not going to be able to tell you any tax advice due to legal restrictions on that. So when you talk to your employer about a W-4, they probably are just going to be able to tell you, here's what you do, here's a W-4, here's how you fill out. And you're going to ask, well, how much should I put in here? How do I do it? And they're going to say, I can't advise you, because they don't want to get sued for giving advice, but that could be considered tax advice. So remember, you want to ask your CPA about, or your tax attorney, or use this Tax Withholding Estimator to figure out the amount of withholdings, and then ask your employer about just the logistics of how you give them the W-4 and go through the process of changing the withholdings. That's generally how it will work. So this tool can help taxpayers determine if their employer is withholding the right amount. This is especially important for anyone who got an unexpected result from filing their tax return this year. So if you got your tax return filing for 2020 and you owed money, which could have happened to a lot of people, especially people that moved from, say, W-2 type employee work to gig work, or people that had to move from a one single person that was working to multiple people in a family working and filing on the same tax return, because that could distort the amount of withholdings and your tax brackets. So if that happened, then that's usually the determination that means that you need to basically adjust your withholdings, meaning you typically tie your withholdings to the prior tax return. That's going to help you determine what your withholdings are in the future. Of course, during these times, due to the volatility for many people as to where their income is coming from, you have to be more vigilant on the withholdings, because you're quite possibly jumping around from multiple different employee jobs, multiple people working, and possibly pulling in gig work and stuff like that on the side as well. So this is especially important for anyone who got an unexpected refund. Also, taxpayers who experience a life event like marriage, divorce, birth of a child, an adoption, or are no longer able to claim a person as a dependent are encouraged to check their withholding. So any big things that happen, that's another time when you want to check this. So like if you bought a home, that could have an impact. If you got married, then of course your filing status will change from possibly single or head of household to married typically, and that'll cause a change that could be worth looking at. If there's a divorce that happened, that's definitely something to kind of consider in terms of whether you're going to be head of household or you're going to be single at that point, and then what are going to be the tax implications of that. If a new child was born, then congratulations, and take that into consideration. An adoption that happens, congratulations, take that into consideration, could have a tax impact as well. So calling the IRS or a tax professional will provide a better refund date. Many people think talking to the IRS, so that's a myth, by the way. That's what they're trying to say here. Many people think talking to the IRS or their tax professional is the best way to find out when they will get their refund. The best way to check the status of a refund is online through Where's My Refund tool or the IRS To Go app. So if you do not have your refund and you call the IRS, they're probably not going to give you any more information than you could probably find on the Where's My Refund thing. They basically are logging into their side of the Where's My Refund thing and telling you. So the IRS is trying to say, don't call us, just like every business is doing at this point in time. Check it out on our website, and they should have it here on the IRS refund area, as well as you can check it out on your phone with the application, the IRS To Go app. So taxpayers can call the automated refund hotline at 800-829-1954. This hotline has the same information as Where's My Refund and IRS telephone assisters. There's no need to call the IRS unless Where's My Refund says to do so. Ordering a tax transcript is a secret way to get a refund date. So that's a myth, and they're trying to say it's a myth. So doing so will not help taxpayers find out when they will get their refund. Where's My Refund tells the taxpayers their tax return has been received and if the IRS has approved or sent the refund. So here's the next myth. This is a myth. Where's My Refund must be wrong because there's no deposit date yet. So that's a myth. So updates to Where's My Refund on both irs.gov and the IRS To Go mobile app are made once a day. These updates usually occur overnight. Even though the IRS issues most refunds in less than 21 days, it's possible a refund may take longer, and there's a link to that here if you want to see possibly why. If the IRS needs more information to process a tax return, the agency will contact the taxpayer by mail. Taxpayers should also consider the time it takes for the banks to post the refund to the taxpayer's account. People waiting for a refund in the mail should plan for the time it takes a check to arrive in the mail. So here's the next myth. This is a myth. Where's My Refund must be wrong because a refund amount is less than expected. That's a myth. So there are several factors that could cause a tax refund to be larger or smaller than expected. Situations that could decrease a refund include, so if you filed for a refund and you're expecting, that $5,000 refund and you got like a couple hundred, you're like, what happened? Then stuff could have happened. So it's possible that, it could include things like the taxpayer made math errors or mistakes. So that could be greatly limited if you file with tax software. So I would highly recommend doing that because you can electronically file with that and it should limit some of those kind of mistakes. The taxpayer owes federal taxes for a prior year. So it's quite possible if the IRS sees, oh, you got a refund of $5,000, that's great, but you owed us money from last year and therefore we're going to keep it, and apply it out, and then we'll give you like the difference. So the taxpayer owes state taxes, child support, student loans, or other delinquent federal non-tax obligations. So it used to be the IRS was somewhat, independent from the state, and they still are when you make payments. You got to make sure you're paying the right person and whatnot. But more and more they're talking to the state and other places, apparently child support and student loan places as well. And so they will possibly hold on to your refund for those purposes as well and pay them instead of giving you the refund as well. So they know more about you. They know everybody you owe, and now they're going to pay them first. Well, they don't know everybody you owe, but they know some people you owe, like the state, possibly child support and student loans or other delinquent federal non-tax obligations. So the IRS holds a portion of the refund while it reviews an item claimed on the return. So if you have some questionable item, the IRS is like, I don't know about this thing. This person's claiming this deduction or credit or something. Maybe they hold on to that refund applicable to that portion. They'll say, we'll give you this piece, but we're checking out this thing here, and we're not gonna give it refund related to it until we are satisfied that it's correct. So the IRS will mail the taxpayer a letter of explanation if the adjustments are made. So note that, of course, if you don't get the full amount, they need to tell you why, right? So if you got something on your tax return, they gave you something less, it's not like they're just going to send you a check or deposit it into your bank account and not give you information why. They need to give you information why, and if you do not agree with it, then you can argue it from that point in time. But usually they'll take the action and then they'll send you a letter and say, hey, this is what we did. Do you agree with it? And you could not agree with it and argue it. Or oftentimes you say, yeah, you're right. I did something wrong there, whatever. And then you move forward. But if they're wrong with it, of course, then you have the right to know what they did, of course, and you have the right to basically argue if you believe that they are incorrect in what they did. So some taxpayers may also receive a letter from the Department of Treasury Bureau of the Fiscal Service if their refund was reduced to offset certain financial obligations.